Gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion because, and by the way, the reason the gold standard failed for two reasons. One, politics and the law. We went off it. We're not even on it anymore. So, but two, they also created a ton of paper gold, and they were really good at doing that. And that's hours long discussion unto itself. But what Bitcoin offers is, and gold is heavy. It's hard to verify. There've been tungsten, bars plated with gold. I mean, it's got all these problems, so to speak. I mean, nobody even really knows who owns what. It's tough to verify. We haven't audited Fort Knox since the 50s.
Bitcoin's increasing price highlights its role as a store of value, challenging gold's status and threatening unstable fiat currencies. As the shift progresses, Bitcoin's unique attributes gain broader recognition. Lawrence Lepard, a notable Austrian economist and Bitcoin advocate, emphasizes Bitcoin's advantages over gold. These include Bitcoin's verifiable scarcity, transparency, and ease of use. He warns of hyperinflation, advocates for sound money, and underscores the Lightning Network's role in accelerating Bitcoin adoption and decentralized banking. Lepard famously described gold as a dead rock that provides no interest or dividends but is valued during rapid monetary depreciation due to its lack of counterparty risk. Bitcoin's verified scarcity captured Lepard's attention, addressing Triffin's dilemma. He highlights the novelty of distributed ownership. Unlike gold, Bitcoin is easier to verify, store, and transfer. Lepard underscores Bitcoin's transparent ledger, which ensures clarity of ownership, contrasting it with gold's unclear ownership. He believes Bitcoin is superior digital sound money that could surpass gold as the ultimate safe haven asset in the coming decades. His tech investment background enabled him to recognize Bitcoin's potential. As we bring you clips from Lawrence Lepard's discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you for joining us again. Enjoy the video.
Buffett's got it right. I mean, gold just is a dead rock that sits there and doesn't pay any interest or dividends. But when the money is being debased very rapidly, it takes on an entirely different set of characteristics, which is it has no counterparty risk and it can't be diluted, and that becomes very important. And so, anyway, I went down this gold and silver mining road, and then along the way, because I know we're going to get into it, as you might imagine, I kind of picked up Bitcoin. So I was always an Austrian economist, or had read all the Austrian economists and believed very strongly in sound money. I knew that since 71, we'd kind of gone down the wrong path. And intrinsically, I was kind of intrigued by the idea of a private form of digital money. And I'd followed a lot of them. I mean, eCash and DigiCash and, David Chaum's work. And, there was Nick Szabo did BitGold and all that kind of stuff. So, but none of them worked. I mean, they all kind of ran into problems. The government jumped on eCash, and none of them really worked. And so I was kind of like, well, when Bitcoin came out, I read it, the white paper, heard of it from the Ron Paul people I was familiar with. I didn't believe it. I was kind of like, yeah. We've heard this before. Sure, okay, another one. Is this really going to work? So I was a little slow. I mean, I wish I had been Max Kaiser and had believed and dove in and started buying it at $2 a coin. That would have been a pretty good thing to do. But I didn't think to do that. I was a technology investor, and Bitcoin is really a technological innovation. And, everyone says, well, this is cryptocurrency, there's all this arm waving. No. I mean, I think Saylor does a great job explaining it in some of his things, particularly the Atlas talk that he gave. I'd recommend people listen to. This is the invention of digital scarcity. And so you can, so digital scarcity, what do I mean? Verifiable digital scarcity never existed before. And, so just like the printing press didn't exist until they invented it, or the airplane, or electricity, or fire, or the wheel, I mean, whatever you want to call it, this is something new. And so, verifiable digital scarcity is going to change, distributed verifiable digital scarcity is going to change the world as far as I'm concerned. And so,
what is the difference between Bitcoin and gold, and that is giving you some more hope or interest in it? Yeah,
so it's a great question, Tom. And there's a lot of different, but so they're both, what they both represent in my mind are neutral reserve assets that solve Triffin's dilemma. And Triffin's dilemma is the issue that, the U.S. has the reserve currency, and therefore we had to print it and grow it, or else the world runs out of money. And so what they made a mistake at Bretton Woods. They should have picked the neutral reserve asset, which would have been gold. And gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion. The gold standard failed for two reasons. One, politics and the law. We went off it. We're not even on it anymore. So, but two, they also created a ton of paper gold, and they were really good at doing that. And that's hours long discussion unto itself. But what Bitcoin offers is, and gold is heavy. It's hard to verify. There've been tungsten, bars plated with gold. I mean, it's got all these problems, so to speak. I mean, nobody even really knows who owns what. It's tough to verify. We haven't audited Fort Knox since the 50s. I mean, there's amongst conspiracy folks, and I'm sympathetic to it. There's some question as to whether we really have the gold we say we have. And so it's a problem. And because it's hard to know who has what, you're kind of dealing with a ledger that you're not sure is honest. The thing about Bitcoin that makes it so different is that the ledger's out there for everybody to see, and it's triple entry. I mean, it's you and me doing a transaction, but it's also published, and everybody can see it. And so, it's easier to store. It's less costly. It's easily verifiable. You can move billions of dollars in minutes as opposed to try and move $1 billion worth of gold. So in every way, shape, and form, it's superior to gold, and ultimately, it will supplant gold. It'll flip gold and become digital gold. I think it'll become the new Marere, as Safe has said. And so, now this is not overnight, right? This is over, decades.
Lawrence Lepard cautioned that governments may declare Bitcoin unlawful and take it, but broad acceptance would make seizure difficult. He emphasized the importance of establishing the Lightning Network to enable faster and cheaper transactions. As on-chain transactions grow more expensive due to limited block size and diminishing block rewards, the Lightning Network will handle smaller transactions. Lepard believes the current monetary system is broken and warns of hyperinflation if not corrected. He argues for the transition to sound money, which he will explore in his future book. The Keynesian experiment is coming to an end, necessitating new approaches to currency and value. Lepard emphasized Bitcoin's purchasing power, highlighting the decreasing amount of Bitcoins needed to buy an average house each year, despite rising dollar pricing. He sees this transition as essential for the adoption of sound money and preventing hyperinflation. Here are more clips from the interview.
It's possible in a dystopian scenario that the government, U.S. government, and others say, hey, this gold and Bitcoin stuff, they're ruining our currency. We're going to make it illegal. We're going to grab it. I mean, I don't think they're going to do this. The SEC approved it, but you never know. I mean, and we're going to grab it, and therefore, we're going to pay you out in cash, and you can't use it anymore. Now, like I say, there are a lot of us who will say, we'll give them the middle finger when they try and do that. But it is a threat. I mean, it is realistic, and governments are going to do anything they can, or I think are at risk of doing anything they can to preserve their privilege. Now, having said that, so I think Jeff's point is we got to get it out there so it's being so widely used as a means of exchange. How the hell are they going to grab it? Everybody's using it. You can't take it away. And so, but the critical piece there, in my view, is that you've got to get the Lightning Network really up and running on a full basis. And that's a tricky problem because there's not really enough money in the Lightning Network to develop big channels. I mean, I could be wrong about this, but from what I can tell, Lightning Network's a little bit of a paradox because it's very, very low cost, but that means it's not very attractive for anybody to enter and put the resources into it to make it really work well. But there are things like Fedimint and others that are coming, and I suspect ultimately there'll be private channels that will, for 10 basis points or something, say, look, we're going to guarantee that your Lightning payment gets there instantly on time, no problem, whatever it might be. But those are the kinds of things that are necessary to make it a means of exchange currency, because as you and I both know, on-chain transactions are getting more expensive over time, and someday will become prohibitively expensive for anything but somebody who's moving millions of dollars. I mean, if you want to move $1 million and it costs you $1,000 for an on-chain fee, who cares? But today, and we're not even close to that today. But my point is, because of the limits on block size, the fees will go up, and because the block reward is going down, the fees will have to go up. I mean, at some point there will be no block reward, and it'll be just an entirely fee-driven, currency. But that's okay because the layer above it can handle it. And that's really what's got to get built out, and it will. The problem here is the money is broken. We have absolutely got to return before we go full hyperinflation. And it's possible we'll go full hyperinflation before the political will emerges. But we've got to solve this problem by going to a sound money some sort of a sound money. I'm writing a book actually on this topic, and I've got a policy prescription in there for how to address this. And I'm hoping that this book actually gets read and some people listen to it, and that as the events play out, people come to realize that the fundamental problem here, you know this and I know this, and this is why the Bitcoiners say it, is fix the money, fix the world. I mean, the money's what's broken, right? I mean, the Keynesian machine has had a very good run. I have a friend in the space who says, the end of the great Keynesian experiment is near. Plan accordingly. And it really is true. I mean, Keynes told us we could have a free lunch. And, for quite some time, we've had a free lunch. I mean, it hasn't been free because we paid for it with inflation. But there's something, Jens Parson, I wrote this in the book, says that, the law of inflation, it's like drinking. You got to keep, or drugs, you got to keep doing more to get the same high. Do you know what I mean? And it just kind of compounds on itself. And that's really the problem. It's not really that one Bitcoin's worth $19 million. It's that in that world, gasoline would probably be $1,000 a gallon. Do you know what I'm saying? I mean, this is really, and that's where it gets weird here, because you're talking about one currency and measuring it in terms of another currency, and the currency that you're using to measure in terms of is a piece of shit currency that's failing, the dollar, right? And so we'll all have to get used to thinking of things in different terms. I mean, I'm sure you've seen the meme on Twitter that shows the number of Bitcoins it took to buy the average house. And the dollar price of the average house is going up every year, and it has for the last 4 years. But the number of Bitcoin it took to buy that house is going down every year.
In a related development, Bitcoin's price fell by over 6%, ending at around $68,777 on November 1st, despite the release of significant U.S. macroeconomic data. The Personal Consumption Expenditures, PCE Index, which was released on the same day, exceeded projections from the market but failed to lift Bitcoin's price. This slow reaction has alarmed investors, especially as core PCE and CPI inflation levels remain persistently high. The persistence of high inflation has important ramifications for monetary policy, particularly delaying the anticipated Fed pivot or interest rate reduction. Analysts and traders are now focusing on the next Federal Reserve decision, which is due on November 7th. According to CME Group's FedWatch tool, market bets remained steady, with 96% expecting a 0.25% rate drop. According to trader and analyst Michael van de Poppe, the upcoming U.S. non-farm payroll numbers on November 1st would likely drive volatility. Van de Poppe believes that rising rates and official unemployment rate data will be critical in deciding Bitcoin's price movement. Meanwhile, Bitcoin whales have actively reduced their exposure in the last 24 hours, unwinding large long bets. This shift in mood is reflected in exchange order book activity, with material indicators reporting a significant fall in whale accumulation. Dawn Crypto Trades thinks that the 2% price decline has erased more than $500 million in open interest. Market participants are keenly monitoring exchange order book activity and variations in open interest. The KBC letter stated that both core PCE and CPI inflation remain elevated and stubborn, highlighting the delayed Fed pivot. Analysts are now waiting for the next major economic data release. In your opinion, will Bitcoin someday replace gold as the best safe haven asset? If so, how may this change affect the world economy? Please share your thoughts in the comments section below. If you liked this video, also ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.